Hello folks, Dave Santarelli here. Today I told you I wanted to go over valuation of a company. All right, now I'm going to make this fairly easy because there are a lot of new investors and a lot of beginning option traders, and I'm sure that a lot of them could use some help or some refresher about valuing a company. All right, now this all stemmed from someone messaging me last week and said, Dave, Coca-Cola is so much cheaper than Pepsi. Coca-Cola is $46 a share, Pepsi is $137 a share, and they said therefore Coca-Cola is much cheaper than Pepsi. And I tried to explain to them that no, stock price does not determine the valuation of a company. And so, after a brief talk with them and trying to help them out, I said in the room I would go over on just a brief understanding here of how I value a company. And this is very important because you have to look at one of your investments as something that you're putting your hard-earned money into. You don't want to put your money into something that's overvalued, that has a lot of hype, but nothing to prove from it. And so therefore, right now we're looking at the Coca-Cola company. Okay, we see it has a price of $46.10 a share. After market, it went down to $46.06. But what I'm going to show you is valuing. All right, very simple here. Valuing a company is we're looking at the price to earnings ratio. Here we see 27.60, and to get that number, we're just taking this price right here. I don't know if Yahoo uses the end of the day price or after hours price. Let's do it right now together and find out. I'm doing this video on the fly here, so let's do it together. 46.0. Hit a wrong button by accident. 46.06, divide that by the earnings, which is the EPS, 1.67. That comes out to 27.58, which here we see the PE of 27.60. So it's less than a fraction of a decimal off here, so that's about right. So 27.58, they must be going by this number right here then. So we see Coca-Cola has a PE ratio of 27.58 from aftermarket hours. Okay, now people would normally look at the stock price of Coca-Cola and say, wow, that's $46.10. Let's go look at Pepsi right now. Here's Pepsi, $103.77. All right, now let's take a look at this one. So we've seen Coca-Cola had, let me write this down here on my tablet. Coca-Cola KO had a PE ratio of 27.58. And we see PepsiCo has a PE ratio of 28.27 on here. We see it has much more higher earnings than Coca-Cola. But let's take a look now and look for ourselves. So let's go 103.7. Let's use the after hours. That's what we used for Coca-Cola. So 103.56. Divide that by 3.67. And that comes out to PepsiCo 28.22. Okay, now looking at this, we see even though Pepsi has a stock price of, I'm writing this down here so I could go back to it in the video here, 103.56, and KO has a stock price of 46.10. Okay, so look at this now. Coca-Cola has a stock price of $46.06. Pepsi has a stock price of $103.56. Yet, the valuation of the both of them are similar. Pepsi has a PE ratio of 28.22. Coca-Cola has a PE ratio of 27.58. All right, so they're valued pretty similarly. All right, now let's look at a company that makes I was going to say computers, but if I used Dell and Apple, that wouldn't be fair because Apple has phones and all this other stuff going for them. You know what? Let's take a look at the banks. All right, I'm going to hop on the E-Trade here. E-Trade Pro. I brought up this sectors map, okay? Let me redo it here. I go into sectors. All right, let's take a look at this. Now, if you're running E-Trade Pro or if you have TD Ameritrade's Thinkorswim platform, it's very simple to just hop on there and take a look at the sectors. All right, so let's do that. This is just the basic sectors. It's telling you, we see the financial sector, we see energy, healthcare, services, technology, transportation, utilities. It tells you what the 1 day, 5 day, 13 week, and you could change this to however the hell you want it to be. All right, so for us, let's take a look at the financials. Let's take a look at regional banks. All right, now see, you could go down here, and let's do this. Let's take a look. You could do this by just going to, is it column view? All right, settings here. We're looking at the settings. Here's all the available information we can put over here. So what's available is, I want to look for PE ratio. I'm sure they have it here. Here's EPS. That's nice to have, but that really doesn't matter here. All right, let's see. PE ratio, there we go. Let's add that to our column. Let's go down a little bit. And let's do the past 3-month performance. And this might have that already. All right, let's add the 3-month performance. And let's see if there's anything else that's nice here to add. I'm just really going over valuation here, but it would be nice to see some other things. All right, let's hit OK. All right, so right here we're looking at the PE ratio. Let's get rid of this stuff over here. All we need is really last trade and change since close. We'll just look at these for now. There's all different types of investors in my group here, so I'm trying to help everyone out. And you know, if you want something more detailed, if you want to get into strangles or straddles or butterflies and talking about different legs, we could do all of that. If you want to really go into the financials of a company, I mean, we could take it step by step and get into each one of those. But let's see right here now. Let's find some symbols that we want to take a look at. Let's see WFS. I'm sorry. Let's take a look at Wells Fargo. Okay, we see Wells Fargo's in the bank. All right, let's write this down now. Wells Fargo, WFC, it's got a PE ratio. I'm writing this down as we go. Like I said, I'm making this video right off the top of my head here. Okay, so we have a PE ratio of 11.699. We see over the performance of the last 3 months, it's even. It's done basically nothing. Okay, so let's see that. 3 months, 0%. All right, now let's look at Bank of America. Bank of America is in the same sector, same subsector, regional banks. Now we're looking here. Bank of America has a PE ratio of 10.679. And we see the 3-month performance is 2% compared to Wells Fargo, which had 0%. Now this is important to me because I want to now take you to something else. we're determining the valuation of a company, and I'm telling you the things I look at when I'm investing. All right. Now, this is just one of the things we're going over here. PE ratio, that's the first step. We're looking at the PE ratio to determine if a stock in the same sector has around the same PE ratio as another one in its same sector. Now, once we find that out, we're looking at what the stock has done over a given time, all dependent upon my time frame for investing. All right, now here we're looking at the 3 month. So I could say, okay, 3 months, Bank of America's gone up 2%, Wells Fargo's gone up 0%. Now, once I've determined that, I want to go back to, whatever you want to use, Yahoo. I have a totally different setup that's very complicated on E-Trade Pro. So I'm just trying to show this here to make it easier. So let's go to Bank of America here. All right, now this is the second step for me in determining a valuation of a company. All right, we see Bank of America has a dividend of 1.43. So it yields 1.43% dividend per year. Now let's look at Wells Fargo, WFC. All right, now Wells Fargo has a dividend of 3.07%. All right, now we see Wells Fargo has basically a double in terms of the dividend per year. All right, now this is something else I do. That was step number 2. I like looking at the PE ratio. I like seeing what a stock's done in any kind of basis, like 1 month, 3 months, 6 months, 12 months, depending upon what you're looking to invest. If you're looking to only invest for 1 month, then change that 3 month to a 1 month investment period. All right, and try to see. Because a lot of times you'll see one stock that's in the same sector, has the same PE ratio. One of them has gone up like 40%, while other comparable stocks in the same sector have only gone up 8%. When you see something like that, either there's something incredible with that company that's gone up over 40%, or something's happening with the rest of the sector that's not allowing it to catch up to the other ones. And that's when you really have to go into detail. Usually when there's a big gap like that, you'll see, oh, there's some kind of news out about that one that's up 40-some%, and that's what's causing it to go up. If there's not, then that's, to me, is a time, oh, maybe I want to short that stock. Or depending on what the market's doing, ooh, maybe I want to get into the other stocks that are in the same sector and they're just not catching up to the other one yet. So that's another step in evaluating a company. Now, here's another thing I like to look at personally, and that helps me. I like looking at the target. You know, here we see Wells Fargo. It's currently trading at $48.20 a share, as a 1-year target estimate of $55.14. Let's take a look at Bank of America. Oh, I typed in something wrong there. Okay, now Bank of America, it's got a 1-year target estimate of $17.29, and it's currently trading at $13.99. Okay, so what I want to talk about now is the target estimate. I just showed you how we looked at that. We looked at the 1-year target estimate of Bank of America, $17.29 a share, and then we looked at the current stock price of $13.99. All right, so for example, if I was looking to invest for 1 year, how much can I expect Bank of America to go up to reach that 1-year target estimate? Okay, so here's the third part of valuing for me. All right, now what I do is I take the 1-year target. I'm pointing at the screen like an idiot here, but that's just because I'm new to making videos. So 17.29, which is the 1-year target estimate, divide that by the current stock price of 13.99, and that tells me they're expecting Bank of America to increase by 23.59%. All right, so Let me write that down. 23.59% 1 year target increase. Okay. Now let's take a look at Wells Fargo. WFC. Let's take a look. All right, 1 year target estimate 55.14. So let's plug it in. 55.14. Divide that by 48.20, 48.2. And we see they're expecting, Wells Fargo, right down here, they're expecting only a 14.39% increase in 1 year. So let's take a look at that now. Bank of America is expecting a 23.59% increase over 1 year. Wells Fargo is expecting a 14.39% increase over 1 year. So Bank of America is expected to have a 10% move higher than Wells Fargo. Now, to take it one step further here, let's look at JP Morgan. JP Morgan has a PE ratio of, just like the other regional banks, 10.31. I'm writing this down here, so forgive me if I'm taking a couple of seconds. All right, now let's look back at so we see now, just to recap, JP Morgan has a PE ratio of 10.31. Wells Fargo has a PE ratio of 11.699. And Bank of America has a PE ratio of 10.679. All right, now let's just take a look here quick while we're in this page. 1 year target estimate for JP Morgan, 69.86. So let's plug her in, 69.86, divide that by 61.82, and we have JPM 13.00% 1 year target increase. All right, so now looking at this, Bank of America is expecting a 23.59% 1 year increase. Wells Fargo is expecting a 14.39% increase in the next year. And JP Morgan's expecting only a 13% increase over the next year. Now also dividend for JP Morgan here is 2.84. So right in between Bank of America and Wells Fargo. Wells Fargo has a 3.09 dividend, and Bank of America 1.43, JP Morgan 2.88. All right, now back to our E-Trade Pro here. Let's take a look. Let's plug her in, JP Morgan. All right. See JP Morgan's investment services on here, but we see JP Morgan has 8% over the past 3 months, and on here it's shown just about the same, 10.3033. So this one though is really located in investment services, so you might not want to put this in the same category. I do, but that's how it is. Now, let me take you to something else here that I personally like to look at. I just gave you 3 things. All right, let's recap them. Okay, we looked at the PE ratio. I showed you how to find the PE ratio. You take the stock price and you divide it by the earnings per share to get the PE ratio. Then what you want to do, you want to find a couple of stocks comparable in its sector. All right, we took here, for example, we took Bank of America, Wells Fargo, JP Morgan. And we found JP Morgan at a PE ratio of 10.31, Wells Fargo 11.69, Bank of America 10.67. And so based on that, Bank of America is our winner in form of the PE ratio. Now let's look at what it expects to do in 1 year. All right, we see Bank of America is expecting to increase by 23.59% 1 year. Wells Fargo is expecting a 14.59% increase over 1 year, and JP Morgan 13% over the next year. So in this second step here, we have Bank of America as our winner again. Now, in form of dividend, we're looking here. Wells Fargo 3.07, Bank of America 1.43, and JP Morgan 2.88. So our winner there is Wells Fargo. Now, let's take a look at we were talking about the 3-month difference too here. We've seen Wells Fargo 0%, Bank of America 2%, and JP Morgan 8%. So we see there, JP Morgan's had the biggest rise, Bank of America's in the middle, and Wells Fargo's basically done nothing for the year. Now, let me go over here. Key statistics. All right, this is the fourth or fifth thing I look at when I'm trying to value a stock. And you have to understand, when I'm sitting here all day, and I'm not posting or I'm not doing anything, this is the stuff I'm doing. I'm searching hundreds of stocks during the week, and I'm trying to find what's best for us in terms of the financials here that I'm going over now, in terms of valuing a stock, which I'm showing you right here, right now. And this is all valuation. Now, there's another thing I do, and you see this video is already 25 minutes, and we've only gone over 3 stocks here. And I do this for at least 10 or 20 stocks in a sector, trying to find our best value. And then that's just one form of what I look at. The next is technical analysis, looking at the charts and looking at what I think is going to have a big move, what's going to jump this week, what's going to be downgraded, what's going to fall. So when I do this, I take the valuation that we're doing now, and then I also look at the technical analysis that I'll go over sometime this week with you guys, or maybe on the weekend, and I'll show you, okay, here's the technical analysis standpoint of the stocks I just found on my valuation. So like this is the total first step here is valuation. That's why I'm going over this now. When I find some good stocks I like here, that's when I go into technical analysis. Unless I see something that's moving fast and that's catching my eye. Then I'll jump to that and I'll say, okay, this is moving quick. I think it's going to have another 3 to 5% move this week, and I'll study the hell out of that and try to pick the best option trade to have a great gain on that. So we're just going over the financials here, valuing a stock. And like I said, once we find this, then we move on to technical analysis. But for right now, we're looking at book value per share. This is one thing I like to look at personally. Book value here, this is on JP Morgan. Write this down. We have 60.47. Let's look at Bank of America. You see this one is 22.54. And let's look at Wells Fargo. Okay, Wells Fargo is at 33.81. All right, now this is important because look at this. Now, I hope you were all writing this stuff down with me because it's important. If you wrote it down, you're going to be able to go back and look at it, and it's going to make things much simpler for you. All right, so we have BAC. That has a book value of 22.54. We have JP Morgan, book value of 60.47, and we have Wells Fargo with a book value of 33.81. All right, so we went back here. I didn't write down the stock price of any of these. What an idiot. All right, let's look here. Wells Fargo is trading at 48.20. JP Morgan, Bank of America, I remember, was at 13.99. JPM, 61.82. All right, so now that we wrote this down, we see Bank of America has a book value of 22.54. and the current stock price is 13.99. So that means Bank of America should be higher than what it's at. All right. Now, JP Morgan has a book value of 61.82. Current stock price is 60.47. That one, let's call it just about equal because it's right where the book value is. Now, Wells Fargo here, we see it has a book value of 33.81, and the current stock price is 48.20. Double check that. Yep, 48.20 with a book value of 33.81. So that's basically saying that from the book value standpoint that they think Wells Fargo is overvalued here. So that one down. So now, based on book value, take a look at this because this is very, very important. All right, we looked at the PE ratios. Bank of America was our big winner with a PE ratio of 10.679. Wells Fargo had one of 11.699, and JP Morgan of 10.31, but we decided that was an investment services, not the regional banks. So looking at that, Bank of America was our winner. Looking at the one-year target increase, Bank of America 23.59. And looking here at book value, Bank of America is the big winner here too. So looking here, Bank of America is the stock I want to look at through regional banks. And there you go. That's how we value a company in a few different ways, by either looking at the price to earnings ratio, looking at the EPS, earnings to price, or earnings per share, and then looking at the dividend and taking that into factor, looking at the 3-month performance or whatever the date is you're looking to invest in a company, like options. If we do 1 month, then I would change that 3 month to 1 month. And then looking at the 1-year target estimate and looking at the book value. So I hope that's helped a lot. And like I said, if you go to either your Thinkorswim platform or your E-Trade platform, you could plug all these in. Like I said, you just go to display, and here you see it gives you, go to columns, and you could click anything you want. So you don't have to manually go through how I just showed you to find everything. Like the price to earnings ratio, how I said that you take the price, you divide it by the earnings, EPS, and that gives you that. But you don't have to do any of that. You just have to go to your sector setup or whatever platform you have. Just take a look at it. Everyone has one. And you could just go down here. They're in alphabetical order here. You see here, here's EPS, price to earnings. That's down below. Oh, here, there's PE ratio. So it's very simple to find all this information. And that's what investing is. It's taking the time, like you see here. I just took 30 minutes, and that's just for 3 stocks. You know, I'm doing hundreds of stocks per week here. And like I said, this is only the valuation portion. Then we have to go through the technical analysis and start looking at the charts. Honestly, that takes up more time than anything else, because I'm looking at the 30-day charts, the weekly charts, the daily charts, the 50-day, 100-day charts. And then I'm starting to use indicators and studies, and so that takes up a majority of the time. But right here, from right now, I just found out Bank of America is a great buy. I like Bank of America. I think if you want to own it, I think it's a great longer-term investment for the next year. I think you should be able to make a nice, tidy profit on it. But like I said, that's just my opinion. I'm not licensed to give financial advice or tell you what to do. So you'd have to talk to your broker to make sure, because like I said, I'm not licensed. So, but I am an educator and teacher, and I do like sharing with you how to find this information. You don't find anybody else doing what I do, and you certainly don't find anyone making it as easy as I try to make it for you. Like I said, I love doing these educational videos because I think it's really going to help you. I'm living my dreams now. I have a great life, and I changed that all myself. If you look at my library of books, I have over 500 books, and I constantly read on my time off. I mean, I got a beautiful wife, and I don't even spend much time with her. I'm constantly, for me, it's all about business, and it's all about what I could do to better myself and better my family. So I'm happy to help you guys with anything you want help with. If you want to learn anything else, or if there's a certain topic you'd like me to explain and go over, please just feel free to ask me or post it in my room, and I'd be more than happy to go over it with you. All right, so this concludes this video of valuation and picking a stock that you want to take to the next level, which is going to be technical analysis. And like I said, you don't just want to do one stock. You pick a few of them. It'd be even nicer if you had like a group of 5 stocks in the same sector and you valued all them. And like I said, make a list. This business is all about research and information. So if you looked at my office here, let me see. Oh my God, I must have at least 30 notebooks full of this kind of stuff. Here's just one page from today. Actually, it's 2 pages, but it's just 2 pages here of stuff I'm just jotting down. So like I said, just write this stuff down. Take 5-10 stocks and go through this. Go through the PE ratio. Go through the 3-month, go through the dividend, go through the EPS, go through the target estimate, go through the book value, and find which one sticks out. If it's all over the place, if like, oh, one of them's a winner here, the different one is the winning one of the PE ratio, you want a stock that sticks out. Like here, Bank of America stuck out like a sore thumb. That's telling me that's a great buy. Now, I would look at technical analysis. Here I am going to throw up a chart, but I'm already at 32 minutes here, so I should wrap this one up. But then we go and look at a chart. And I would show you right now that if we look at Bank of America chart compared to JP Morgan or Wells Fargo, that's also going to show that Bank of America is a damn good buy. And that's how I find my stocks. And that's why I'm as good as what I do. All right. So anything else, please feel free to message me, or like I said, in my room. Anything you want to go over, it's fine. Like I said, I know my stuff. I just made this all up on the top of my head here. So anything else you want to go over, just let me know and we will. All right, guys. Hope you had a great weekend. I surely did. I mean, it hit the 80s today. Last week, I think, what was it? It was in the high 20s last week, and we were freezing our butts off here in Northeast PA. And then all of a sudden next week it's 80 some degrees. The weather's crazy here. All right, guys, hope you enjoyed your weekend, and I'm really looking forward to this week. We have a lot of earnings coming up, and I know we're going to have a great quarter and make some fantastic calls here in the group. So hope to see you. Hope you're joining, and take care. All right, bye-bye.